Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on Wednesday the 8th of August 2018. I'm Darren Sinden and you can follow me throughout the day on Twitter by using @ds_Pepperstone. Right, let's take a look at the overnight changes and price moves to be aware of. Again, a relatively quiet session on the world's global foreign exchanges, but there were some moves of note and we'll look at a few of those now. First of all, euro and sterling both pushing back against the US dollar. The euro gaining by 0.19% against the US currency, sterling gaining 0.15%, but still below that key 130 number, which is really a psychological barrier, but it would be nice to see the pound pushing back above that from a UK perspective. New Zealand dollar also pushing back in Asia Pacific, showing it's not just a European show. 0.38% to the good after some inflation expectation data. Yes, 67.58.50 the Kiwi trading shortly before we recorded the video. And going the other way in Asia, the Chinese yuan down by around 0.14% against the US dollar, and we'll look at some of the reasons behind that fall momentarily. But interestingly enough, the dollar, as expressed by dollar index, has given ground 0.14%, 0.15% I should say, down on the day to trade at 95.01. It doesn't like it above that 95 level. Hasn't fallen below it at the moment, but I think we can look at that 95, that round number, and see exactly how the dollar wants to trade over the coming days. If it breaks below, I think that will tell you a lot about the real strength of the dollar. If it stays above, then of course that might be a different story. Okay, what's on the calendar today? Events that may move the markets. Well, the focus really for major data is in Asia Pacific today. There's nothing really of consequence coming out of Europe today. So we've already had home loans data and investment lending data for homes out of Australia at 1:30 this morning. We had at 3 a.m. RBNZ inflation expectations data for the second quarter of 2018. We've also heard from the Reserve Bank of Australia's Governor Philip Lowe in a speech he gave at 3:05 this morning. And then in terms of data, trade balance data out of China for the month of July, and we'll look at that data in a bit more detail momentarily. Then, as I say, nothing really of note or consequence in Europe, so we're really going to be trading the Asian data and the expectations about what's to come when we return to Asia Pacific and to New Zealand at 2100 tonight for an interest rate decision from the Reserve Bank of New Zealand. Then that'll be followed at 2200 by a press conference from the bank's governor. And then we jump forward to 2350 for data out of Japan. Foreign bond investment and stock investment in the weeks of August and July the 3rd respectively. That's followed by the most important piece of Japanese data, machinery orders for the month of June on a month-on-month and year-on-year basis. Okay then, breaking news and comment that's caught my eye overnight. First of all, US officials announced that new tariffs will be applied to up to $16 billion worth of Chinese imports from August 23rd, cranking up the pressure on Beijing once again in the escalating trade war. Meanwhile, Chinese trade balance data showed growth in both imports and exports despite the ongoing trade war during July, though the trade surplus shrank as imports grew by an impressive 20% versus just 6% growth in exports. I wonder if Chinese companies are stocking up on imported goods before ever higher tariffs and even wider tariffs are introduced. And in other news, Elon Musk suggested last night that he may try to take Tesla, the electric car maker, private, although there were a few details beyond that bold suggestion. Okay then, food for thought, something to take away with you into the trading day and beyond, and why not think about this? We have seen solid balance of payments data from China this morning, but what does the wider economy look like under the hood? Well, both manufacturing and services PMI data have both moved lower recently, and it seems now that profit margins are being squeezed, perhaps as a result of trade tariffs across the Pacific. And the charts here from IHS Markit show us the performance of services and manufacturing PMI data, and the bottom chart picks out margins and the direction of travel there in both services and manufacturing, and sadly they've both been trending lower. They are perhaps coming off the bottom now. The question is, will trade tariffs continue to squeeze Chinese industry and put pressure on economic activity in the country? Please take a moment to read the risk warning. Trading CFDs and foreign exchange on margin can be a risky business. If you're in any doubt about those risks or the suitability of trading leveraged products for you, then please do contact your Pepperstone account representative and do take a moment to read this risk warning. Thank you for your time.